All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at the technicals and the fundamentals to see what we could take advantage of in this Forex market. So, without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear, do me a huge favor. Let me know my mic is working this morning. Drop me a one in the chat and let me know that we are all ready to go. All right. All right. So let's make sure that we start each and every morning with a strong foundation, making sure that we are taking massive action in the Forex trade room. We want to make sure that we are accepting all possible losses before entering a trade, preparing for any outcome. We want to make sure that we center ourselves in body, mind, and spirit, ensuring a balanced approach to trading. And that we want to make sure also that we trust in our education, strategy, trading skills, intuition. And we always want to imagine our trades successfully materializing. We want to be sure to obey our trading strategy, avoiding decisions based on greed or fear. And we want to make sure that we are never looking back or stopping once our trade has commenced. I hope everybody has had a wonderful week so far this week. And I hope you are all ready to go to see what we have going on in the markets this morning. So let me close this out. Let me make sure that I go over to the Forex Factory as well. But we'll start front page with trading economics. And we see right out the gate this morning that we had UK GDP unexpectedly grow. That is good for the pound, right? Because GDP is very, very important. That's one of our key fundamentals that we definitely pay attention to here in the Forex trade room. And so we see that the British economy expanded 0.1% on the quarter in Q4 2024, following no growth in Q3, right? And beating forecasts of 0.1% contraction. The expansion was driven by gains in services and construction and a in change, large increase in change in inventories while production contracted for the fifth straight quarter. Exports and business investment shrank, and household expenditures showed no growth. Considering full 2024 GDP expanded 0.9%. Right. So unexpectedly grows, but you can see where you still have some challenges, but that's positive news considering what the forecast was. But when you really dig down, right, and we look at, the numbers, we do the numbers crunching, it still has some challenges overall, but beat forecast. So that's good right now in at least the short term. We see that the US PPI to rise at a faster pace, annual rates to slow, so that's the projection. So US factory gate prices are expected to rise 0.3% month over month in January 2025, up from 0.2% in December. However, annual producer price inflation is forecasted to ease slightly to 3.2% from 3.3%, which had been the highest rate since February 2023. Meanwhile, core PPI, which excludes food and energy, is projected to increase 0.3% on the month, making the largest gain in 4 months after a flat reading in December. On an annual basis, core PPI likely slowed to 3.3% from 3.5% in the previous 2 months. Um, the January PPI report also included an annual update, seasonal adjustment factors revising data for the past 5 years, and expected routine adjustment that may lead to historical revisions, right? So if we come over to Forex Factory this morning, you can see um, we had CPI come through, but the Swiss franc is right on forecast. And you can see here, I've got to read more into what's going on with that CPI, more into the details because I see some movement with some of those Swissy pairs this morning. Core PPI this morning, so that was trading economics projection. The actual PPI report comes out at 8:30 a.m. this morning here, Eastern Standard Time, and then we also have unemployment claims. All right, hold on one second, everybody. All right, I'm back. My apologies. So, going back to yesterday, want to make sure that we cover the CPI, right? Because we talked about it coming out of the weekend that this is key data, right, in regards to inflation. And we see here in the United States yesterday, um, and mind you, this report came out after Chairman Powell's testimony from the day before, that we saw CPI in the United States move upward, right? So we see the core CPI month over month, the forecast was 0.3%, came in at 0.4%. CPI overall month over month, 0.3%, came in at 0.5% above forecast, and year over year, the CPI ticked up a bit from 2.9, which was the forecast, and also matched the previous to 3%, right? So moving in the opposite direction. So what does that mean for the market, right? Yeah, like Powell said before, like they've been saying, there are no rush to cut those rates, right? No rush to cut those rates. And it was good to see, right? Despite the pressure, right, from President Trump sending out his tweets or whatever he does, right, saying that interest rates need to be cut, right? So, you know, glad that the Federal Reserve maintains its independence. Um, the last time Trump was in office, he was screaming for rates to be cut, and we can only imagine what would have happened if Powell would have done what he wanted him to do, right? So it's important that the Fed maintains its independence. So again, there are no rush to cut rates. We still have some inflation struggles, right? We're not at that 2% target, and we've got CPI creeping up. The price of eggs have indeed doubled, right? Also, yesterday, crude inventories, right? Forecast is 2.4 million came in, right? Negative at negative, right? Actual was 4.1 million, right? So that missed forecast, right? So the inventories are up on oil. So yeah, that was yesterday. Um, and again today, core PPI coming through. So back over to trading economics. Um, we see that Swiss inflation rate falls to 0.4%. So that's why. Give me one second. All right. So definitely read more about that this morning. Because like I said, I see some movement in the Swiss crosses. Um, so it said it falls to 0.4%. And hold on one second, let me go back. Swiss franc came in at negative 0.1. All right, so I have to read the details on that. Um, Euro strengthens on Russia, U.S. Russia talks, right? So that strengthened the euro. One of the wild cards, right? Euro climbed to $1.04. That's against the dollar, its strongest level in 2 weeks, driven by optimism over a potential resolution to the conflict in Ukraine. President Donald Trump announced that the U.S. and Russia would begin immediate negotiations following uh, his conversation with President Putin, and that the two leaders would meet in Saudi Arabia for the discussions. Meanwhile, monetary policy divergence between the ECB and the Fed continues to weigh on the euro, right? So that's where I had the long-term short play in. It continues to bounce around though, right? At least in the short term because of what's going on. So with the Fed maintaining a cautious stance on rate cuts by the ECB is expected to continue easing. Additionally, Trump's trade policies remain in focus as the European Union vowed to retaliate against U.S. tariffs on European steel and aluminum. European Commission President Ursula von der Leyen condemned the tariffs as unjustified and pledged firm countermeasures, while German Chancellor Olaf Scholz warned that Europe should respond within an hour if measures were implemented. So, looking at a trade war, right? So, at least potentially. So, we'll see. Um, uh, yep, Joy, I saw that. I appreciate it. You put that for the inventories for oil. Thank you so much. Um, yeah. So, one thing that was that really caught my ear regarding this Ukraine-Russia situation, which we know clearly, well, at least some of us know clearly here in the United States what that relationship is between Donald Trump and Vladimir Putin. A lot of us saw this coming all along. You had Trump's defense secretary, uh, Pete Hegseth, yesterday flat out say that pretty much there's no way that the Ukrainian uh, border is going to look the same as it did prior to the war, which a lot of us kind of knew this is the direction it was gonna have, right? So potentially Putin's gonna have his way. So we'll continue to see how that plays out, how that plays out with the funding that the United States is currently providing to Ukraine, and we'll just watch and see. So more volatility ahead, most likely. We'll see how this meeting goes. Um, in Saudi Arabia between Putin and Donald Trump. So that's that. Moving over to taking a look at gold, hovered near a record high, 2,900 per ounce on Thursday, as investors continue to sought safe haven assets amid continue to seek safe haven assets amid rising trade tensions and economic uncertainty. All right. So we know what's going on with the tariffs and everything there. So when we look at what investors are doing, right, they're still piling into gold, right, as that safe haven. WTI crude futures held its decline, 71.20 per barrel on Thursday, as investor sentiment remains subdued following the talks between U.S. President Donald Trump and President Vladimir Putin. Right, and then we saw that um, the data revealed a significant 4.1 million barrel increase in U.S. crude stockpiles last week, exceeding the expected 3 million barrel rise, right? And Joy does a great job of making sure that she puts those reports for oil in the community, right? So I'm gonna drop Joy some sevens in the chat. Um, she's always dropping good information along with other people in the community, right? So we all stay up to date on the details, right? Teamwork makes the dream work. So if you ever have an interesting article, something you found fascinating, things that the group should know, don't hesitate to share it. All right. Ryan, good morning, sir. How are you?
Good morning. Good morning. I'm doing well, man. How about yourself? Good morning, everybody.
Uh, yeah, man. Oh, doing pretty good, man. Doing pretty good. Uh, so yeah, man. I know you've been super busy. Glad the session went well yesterday. I know you're getting caught up on things, but anything on your mind fundamentally that you might have caught here recently?
Um, you're covering it right now, man. Um, I'm still doing some more research on Bank of Japan and where they stand.
Mhm.
It's looking like um expectations are second half of the year they excuse me could increase their rates to 3/4 of a point, 0.75 basis points, or even to um, 1 whole point. Their wholesale inflation was at a 7 month high of 4.2% in January.
Hmm. Hmm.
And they're expecting the labor negotiations, excuse me, sorry, expecting labor negotiations to come out with salary increases around 4.9%.
Oh, wow.
Um, and those are, set to kick off here soon and then wrap up toward the end of the quarter. Um, and so with that, they are looking at sometime in the second half of the year, holding until then, still remaining maintaining their cautious approach, but looking at starting to increase those rates in the second half of the year. So potentially two increases um, in the second half, getting them to a full percentage point. So um, that's where I'm working on just some additional details to drop into the community in a blog post. But that's what it's looking like out of Japan right now, and that's it outside of what you've covered, bro.
Appreciate it, man. Yeah, it's gonna be interesting because those yen crosses are bouncing around
Yeah,
uh quite a bit. I'm interested to see if they when they go to 1%, especially if they do it sooner than projected. I wonder if that creates a complete reversal on the yen for the year.
yeah,
I have to read more than that. What that 1% would mean, and how the market participants are gonna take that move. So because they've been under 1%, right? They were negative at one point.
right,
So,
right,
and we know they're lagging behind, but we know the major role that their economy plays and that they're, a major export economy. So I'm wondering, what that long-term impact of a 1% hike, a hike to 1% would mean for the yen. So yeah, I appreciate it, man. Thanks for the update.
no doubt.
All right, let's jump into these charts, right? Take a quick look at the DXY, and we'll go through some of the setups that we've been tracking, right? Dollar's bouncing. Again, it's always a headache when you've got the dollar that's going back and forth, kind of range bound, right? When the dollar's not trending, right, it can make the market a little bit challenging. But the good thing is that we look to trade zones and sweet spots, and we've got quite a few of them playing playing out right now, right? So that's why it's very important to stay patient in these markets, especially when you've got a sideways dollar, right? So just right out the gate, want to take a look at this Aussie CAD, right? Because it is continuing to decline, right? Now stochastic's back in the buy zone, but that's making a pretty good push down. But this is it on the 4 hour, so that is continuing to progress to the downside. So looking for lower lows and lower highs on that, right? So we'll kind of in a range here, but if we take out these lows here, this is the 4 hour move long term, then we'll look for that to continue to make its way down. So just wanted to check in on that one real quick as that continues to uh, decline. So we'll continue to follow that. Is that Ozzy is still facing some pressure. Um, Taking a look at I want to look at this Bitcoin because this has been kind of hanging out um, in this 80-20 zone for a while on the daily and kind of in a range, right? So, if you're into the crypto and you're into trading Bitcoin, just be careful because we're on this daily when the 80-20 zone and it just cannot make its mind up right now. Right. So you could see further declines, right? Maybe at least back down to that 90,885 level um, to test support again. But that's a mess right now in that 80-20 zone. So be careful, right? Our daily stochastic is in the buy zone, but it really hasn't done much, right? Hasn't done much, right? We shot up to that 108 level. We didn't get to that extension, and it came right back down. So that one's quite interesting. So keep an eye on that. Moving in to the Swissy yen, we've got a bullish move, right? That's what we were talking about this morning. We see that, uh, I mean, talking about this morning in relation to seeing the Swissy pair is moving, right? Swiss cross is moving. Inflation rate falls to 0.4%. So gotta have to read more into the details on that because we're getting a move, right, to the upside, which technically, right, we were in a position for 80-20 on the 1 hour with a TP2, right? On that 80-20. So if you were able to take that trade, congrats, because the Swiss yen is a mover, right? So when you get it moving and trending in either direction, it is no joke, right? So the TP1 250 pretty much, TP2 340, right? On that move. Now based on this 4 hour chart, we've got a larger fib sequence playing out to where you see here, right? We've got them playing out pretty good. So here was the 80-20 previously. That look, a U-turned, right? In the zone, we pulled back 86%, then collapsed. We got a new fib, and we've got an 80-20 in the zone. And so we'll see if we can continue bullish momentum now to even hit TP1 on this larger fib on the 4 hour. So, with that being said, you may see this 1 hour fib, if we continue to bullish momentum, get taken out, right? As we climb higher, right? Larger time frame controls the lower time frame. So if you get a deep, deep correction here to TP1 and beyond, you may see that 1 hour fib taken out, right? As it looks to move higher. So that's the Swiss yen. Any questions on that? No?
No,
All right.
sir.
Again, appreciate it. Again, every week, everybody, preparation is the key, right? Preparation is the key. There are some weeks when you go through all your pairs and all your stocks and everything, and you just don't see anything really. So you have to wait, right? And then things uh, come into view, right? So that's the Swiss yen. Moving down to the Euro Aussie, okay? We had a 1 hour 80-20 that has since moved and taken out the A, right? So we are just talking about that last pair here, that 1 hour higher, a push higher on your larger time frame can cause that A boundary to be taken out. So technically, you hit 1, 2. We know our top of our A boundary is at third level. So all three taken out, right? So that's a beautiful swing there. So Euro Aussie, we know that that's a major move, right? So uh 90 there, over 100 to TP2. At TP3 level was 175. And what we do, right, is now we flip that fib. When that A is taken out, we find a low, flip it the other way. You don't have a major pullback here. You're in the 80-20 zone. It's moving bullish for sure, right? See if we stay above this 166 level, right? If we break below it, we may come back down. You never know. But when we look at the grand scheme of things on this Euro Aussie from the higher time frame, 4 hour chart running it off this low, this impulse move. We got this pullback, and now we've got this swing, right? To at least 78.6%. So on this 4 hour, we can expect a 127 extension to be hit if this wants to continue bullish. So now it's just a matter of whether or not we pull back before heading to that 127 on the 4. Okay. But we clearly settled down at this weekly support level within our AB boundary and price took off. So do we stay above this 166 or do we pull back on this lower time frame, right? For a deeper correction that can give you a good entry to buy, right? Give you a good entry to continue buying. But we see our stochastic on the daily is in the buy zone, so we could see more upside momentum. All right, so that's how that's playing out. All right, moving to the Euro CAD. Okay, so you can see here on the 1 hour, we've got a swing, right? 80-20 swing. No 382 prior to the break of the B boundary. So we know there's a possibility that it can return for a deeper correction. Okay. That's the whole 80-20 play. We drew it up on the 4. Right. And you can see how we broke the inner trend line, outer trend line, and it looks like we're trying to get to that TP1. So if you're trading on the lower time frames, 15-minute, 30-minute, things like that, you want to look for continuations, right? Pullbacks and continuations. But just off that level on this Euro CAD, right? So if you come out that 127 zone, we got up 116 pips down at 88 right now. That TP1 target is at call it 175. All right, so that's the Euro CAD. So we're in a down retracement zone. And so a lot of times we'll see technically what could happen before we get the fundamental catalyst, right? So we drew these up coming out of the weekend saying, hey, technically we're in one of our sweet spots. What's the sweet spot? Our 80-20 zone, right? That's one of our plays. Okay. And then fundamentally, right? Often we don't know what that catalyst is gonna be. Sometimes, if we have um, a major fundamental report coming out, CPI, PPI, GDP, retail sales, right? Things like that, consumer sentiment, reports. Uh, we can kind of project if we're at a key technical level, we may say, hey, GDP is out for whatever country. We're in the 80-20 zone with these crosses, or when the CDD push zone with these crosses, maybe that economic report is served to be the catalyst. But sometimes you don't know, right? The euro has been bearish. They cut rates. We're looking at future rate cuts, but we get the wild card, right? The euro strengthens on U.S. Russia talks. That's why it all matters, right? That's why it all matters. So even though we've been seeing the euro trending to the downside, we understand the Fibonacci sequence is that the market moves in waves, right? And so even though medium to long term, this euro may indeed continue to move bearish, but price likes to pull back, right? Price likes to pull back to create those lower highs in the downtrend. All right. So this is the process, right, of it doing that. And we can make money on the counter trend plays. Okay. This Euro CAD, right, the daily stochastic as you move through these euros is back in the buy zone. This is an official swing low, has been now. Uh, for a couple of days, actually. And so we created a low of support. We got our stochastic in the buy zone. Again, if you use the daily charts and you just focus on swing lows and swing highs lining up, which is stochastic, there you go. Right. So we'll see if that wants to continue to move higher. But that's the Euro CAD. Also, we have mapped out the Euro NZD, right? And you can see, right, where we pretty much reconfirmed this low, right? That was the question. That was the question. Has resistance becoming future support? It reacted before. We got it again. Stochastic, right? In our buy zone. We've got that swing low and we're moving higher. Okay. We're moving higher. We've got another resistance level coming in there. Make sure we mark that up. Move that down. Same thing over and over again, right? It's a repeatable pattern. Okay. There. So come to that one. Look at that swing. Bang. We recognize that what everybody, what's the rule? We did not get a 382 retracement prior to price breaking the B boundary. Oftentimes we know that it'll stall around your 118, 127 zone and reverse out. Right? That's the beauty. 95, 131 through that TP level 8 boundary 187. So that's the Euro NZD. We could see pullbacks and continuations. All right, on the Euro NZD. Check it in on this Euro dollar because we got this short-term boost. So our long-term play, it just continues to range, man. Like it'll it'll move down, then it'll pull back like it did here. it'll move down, then it'll pull back. I just like it long term short because of the interest rate situation, right? The divergence in the interest rates. We've got the U.S. holding the euro, um, looking to cut rates further. They just recently cut rates, so I'm looking for that to continue to move to the downside. But hey, in the short term, you will have some things happen, right? Fundamentally, again, what's going on with the Ukraine and Russia and those talks and negotiations supposedly starting to end the war. We'll see how that goes, right? So that's continuing to bounce around. Um, moving into the pound pairs, right? Taking a look at first, we'll stop in and take a look at this pound Aussie, right? Where we found a low, right? So this is reversing out. We got this 382 playing to swing low, swing highs, right? On this daily chart, right? You had a swing high, you had a decline, right? Lining with the stochastic. Now we got a swing low there, lining with the stochastic. So we're moving, you know, back higher here. Long-term play, right? So there's that long-term 4-hour swing, the ebbs and flows, right? That positional type trading continuing to move higher again. Okay, so we come down here to the 1 hour. So we look off that leg, we're moving higher. Let me let's put a cloud on here. Right? And so we just broke the cloud off this impulse leg and we just hit an extension. So, right, we got some positive data, right? UK GDP growth unexpectedly, right? Unexpectedly grows. Okay, so we got a boost, right, in the pound. Fundamentals and technicals. It all matters. It all matters. So we're bullish, we hit a D extension. So we look for pullbacks and continuation. So eventually, right, if this is going to be our swing high, 1 hour chart, we got one candle forming here to the right. We need a second candle to the right. That's lower than that swing high. So we've got a beautiful ABCD wave. We got a 50% pullback there. So if that holds as the high, then eventually we'll get a new fib that looks like this. And then we'll want to look for pullbacks and possible continuations, right? Okay. So that's where we are on the pound Aussie. So continue to look out for that. Moving down to the pound CAD. Okay. And look, right, we settled in. Okay, we've settled in. Look at the similarities in the price action. Okay, boom, impulse move up. Had to drop off, lining with our stochastic here. We've got a low forming, lining with the stochastic in the bottom. All right, so we had the 80-20 off the drop off. Remember, see that? Beautiful 80-20 swing there. TP1, TP2. Look at the U-turn. Held up a daily support. Now we've got price turning over a bit. Okay, turning over a bit in the zone. Okay, so we got an A6 retracement. If this is going to continue bullish now, okay, and if we've got an A6 retracement, I'll pull back to 86% of that 0 to 100% move, can we expect enough momentum to carry us, okay, to that 118? Okay, beautiful 80-20 play. We've held within the AB boundary, and right now it's trying to correct. We'll see what happens after the cloud break as that cloud continues to shift. So if you like trading C to Ds, but you only get in after that cloud breaks, we're not there yet, right? You'd have almost 120 pips after that break from where we stand now, but that cloud is probably going to shift. So we'll continue to watch that. So that's the pound CAD. Taking a look at the pound yen that we had marked up, setting up for the reversal. Beautiful move. Look, same price action in that pound. It's a pattern driven market, everybody. It's pattern driven. Okay. Swing high with the stochastic. Boom. Here we are off the low. Okay. what do we have, right? We had a decline in the pound, put us in an 80-20 zone. AB boundary, we did not get a 382 retracement. We pushed down to our 118, 127 zone. That, everybody, is an 80-20. Okay? Got the reaction. Got the reaction. CP1 hit, CP2 hit. We'll see what happens with the getting crosses, switchy crosses, right? We're seeing some movement this morning. Like I said, we have to read more regarding the details of what's going on. We got a reaction off the daily here, but stochastic is in the buy zone on the daily, so that momentum may eventually continue through and break that. We'll see if that A gets taken out, but right now we're pulling back off that daily level of 192.83. So we've got some profit taking going on right now. So we'll see what happens to run it from the bottom. All right, I got a 382 pullback, so not an 80-20 on that subfit. So we'll see what happens with that. But if you took it out of that zone, congratulations, right? It's a pound yen. We know this is the beast, and so we know it can move, right? 300 pips just to TP1 out of that zone, okay? 400 to TP2, and then we pushed even higher than that, right? Sweet spots are important, right? Are important. We know when we're trading with the trend, our sweet spots are that 61.8. That 786 zone. Look at the reversal here. Oh, all right. So we'll see. That play is over. We'll see if this A gets taken out or if we move right lower. Not sure at this point, but we know that counter trend trade move play out for us. All right, so that's the pound yen. The pound NZD. All right. Again, wanted to point this out because look at the correction that's being made to this upside move and that reversal out, right? So look, stochastics aligning, swing low there. We can see a higher push, right? Think about that, right? We're over $2. Over $2. Look. Do we remember this, everybody? Right? Months and months now. We are still swinging to the upside. Okay? Still swinging to the upside. Still have a ways to go. 50% retracement, 1.618 extension. All right. Put this price level on here. All right. 29,230. It's continuing to move in that direction. All right. We still have George flag pattern drawn up. Moving. Okay. Moving. So that's the pound NZD. Our pound dollar is in a similar position, just like um our euro dollar. Right. Still ranging, trying to make his mind up. Short-term boost to the pound this morning, just like with the euro, and we've got a range going on. Tariff situations, trade wars back and forth. Like you say, when that dollar is moving sideways, when we got uncertainty with the dollar, you get things like this. But small position, long-term move, right? We like to still see that move to the downside. Just gonna let it play out, right? If it doesn't take out the A, has no choice but to go our way. All right. So that's the pound dollar. Taking a look at the dollar CAD, right? Because we're not getting any movement out of this one yet. This is another one that we drew up, and it's still kind of just sitting here, right? Trying to figure out what it wants to do, right? But if you got in that trade, right, it's still active. It never broke consolidation to the upside or anything. But if you just played the zone, you still have an active trade. It's coming right back up in that range. So we'll see if it eventually wants to break out. But hey, you got your stop loss set if you're in it. If you got your risk figured out, just let it play out. Just let it play out. Okay. So that's the dollar CAD. Moving on, right? Taking a look at this dollar yen. Okay. This is another beautiful move, 80-20, right? Both time frames. Bang. Right? Moved up, got us TP2 out of that 118, 127 zone, 80-20, everybody. Okay. 240, 340, right? Big moves if you stay patient. Let's see what happens here. Don't know. Dollars all over the place. But you see, even though we've got some dollar uncertainty that's bouncing back and forth, isn't it amazing that we trade the sweet spots and price moves where we need it to move? Right? I'll always be, forever be fascinated by that. Right? Technical setup that we discovered that pays off. Right? Pays off. Okay. So that's the dollar yen. And that's that. Moving on to taking a look at commodities, right? Oil. Look, we never got that break. Look, it tried to break that cloud, never stayed above that cloud. We're right back down to this area at 70.39. 4 hour stochastic is in the buy zone. Do we double bottom? Do we get below 70 on oil? We'll see, right? We'll see. But we're in a double bottom type of situation right here. Let's see what happens. Let's move up to the daily, see where we are. Daily stochastic is in the buy zone. We're right back, right into that mess. A lot of back and forth with oil, right? So make sure, if you haven't, you check out those reports that Joey posted in the community. Okay. So oil declining, right? We saw the increase above forecast with the inventories on the latest report from yesterday. And so we'll see if we continue to get downward pressure or if this is the level where we get some buying activity on oil. We'll continue to watch the fundamentals on that. Joy, anything you want to add regarding that oil situation?
Yeah, that tool that I put in there, you know how we are always questioning, I wonder what's going on with China oil and stuff like that. Now,
Hmm.
granted, once I posted, I was coming out and I was like, oh dang, the content said it was last updated November 23. But there was a couple hyperlinks I was interested in, and I noticed that it did bring up the data last of August 24. So then
Hmm.
that way, I guess that's kind of like a starting point, from there to see, the ebbs and flows of the energy issues and statistics that they have in China. But then you can
Okay.
select any country or region in there and get the same, they've got population data, energy usage of the population and stuff like that. So I thought that was I ended up having like a nerd moment. So I thought it was very interesting.
That's
I
cool.
do have another site, but um, it's a more opinionated site, and I didn't want to post the article, but it did have like some nice points to it. But I didn't want to post it. But they was like you said, they was talking about um Trump posting on his platform, his social media platform and stuff like that.
Hmm.
Because I
Hmm.
was trying to figure out some of this information that they say. I'm like, I'm not seeing this information, and now I get it because it's on that platform.
Okay.
Um, but a lot of information that's going on the platform, he's sharing what he's doing with Putin and Ukraine, and so that they're trying to do the ceasefire. So once that, I noticed that when that report came out yesterday, because oil was doing fine, then after that report came out, I'm like, dang, it didn't pull back again. So yeah, that's it.
Yeah,
Just waiting on them to figure out what they gonna do.
yeah, that's good. That's gonna be interesting. Um, Putin's his boy, right? That's why I'm interested to see if they cut funding for supporting Ukraine in the war. Um, I know at least with this current administration, like we talked about earlier, what his defense secretary said yesterday was an eye opener.
But I could have sworn
Mhm.
he's asked Trump is asking for Ukraine to give over their mineral rights.
I wouldn't doubt that. You got a defense secretary that said that the border's not going to look the same. He said it's pretty much impossible for them to think that it will. So he's gonna side with his boy on this,
Wow.
which is what people were trying to tell people in the United States during the campaigns, right? So the shock and awe that a lot of people are expressing online is unbelievable to me. It's unbelievable. It is unbelievable because he literally told you what he was gonna do. So
Mhm.
this is where we are. This is where we are. So I knew the situation was gonna end up like this, and they were gonna lose support. So we'll see what plays out. I appreciate the updates on that.
Well, as long as we got
Um,
Jay Powell up there, I hope it still can be alive.
yeah, he holding it down, right? He was like, nah.
Man, let me
It's
tell
like
you,
he
I
was
ain't,
like, no,
I
no,
ain't never
I'm not
seen a
quitting.
man under pressure. It was like he was like in the gladiator circle, and he's like, I'm not about to go down this hole. But yeah, he stood his ground.
Mhm. He definitely stood his ground, and so proud of, and that's that was originally Trump's guy, right? So people forget about that. People forget about that when Powell came into power in that position.
No, he
So,
was appointed by Obama.
oh,
He was appointed by
oh,
Obama, but
well, well,
he stayed.
I'm sorry, he's conservative. He's a conservative, right?
He's a
That's what
yeah,
I mean. Yeah,
yeah. He was,
yeah,
but Trump
but
liked him, so he said, "You can stay."
yeah, yeah. So yeah, he's a conservative. Yeah. So yeah, we'll see. We'll see. Quite interesting. I appreciate you keeping us abreast of what's going on for sure. All right. So gold, right? Hey, it's a no-brainer right now, right? Times of uncertainty, market participants are going to park asset money into gold, right? So you see the shift. It's just continuing to run, right? So we didn't quite get a 50% retracement on that. 382 bounced off that daily support, and it's been bullish ever since. So just continuing to look for, let me go down to the lower time frames. Continuing to look for pullbacks or continuations. We'll knock this out now because it blazed right through that sub fib extension. So we'll redraw this up a little bit on gold. But uh, we're in a bullish situation on gold. Okay, it's continuing to run against the dollar. So if we come down to the one, smaller time frames, and missed that one. We missed that. At least I did. You guys might have saw this on the 1 hour. It's just breaking above the cloud. That's a 61.8 pullback. That's a 118. Well, I mean a 1.1, a 1.618 extension. So if you're a cloud breaker, it broke the cloud and it's pulled back. All right, we're above the 50, above the 200. They're both trending in an upward trajectory. All right, so that looks bullish to me. All right, so you might have not have caught it off your 61.8 off that 1 hour, but like I said, if you like trading cloud breaks anyway, you're just now doing that. So that's a potential opportunity there. Any questions on gold? No.
No, sir.
All right, that's looking pretty clean too. Gold to 3,000. So hey, you
I
know the
thought I
market
saw
appreciate. Hmm.
lower time frame and an 80/20. Hold on.
80/20. We can check that out
I
too
think
off
it
this link right here.
was 5 minute, maybe 5 or
5.
15.
Okay, let's go 5.
And then we have a sub fib to the downside in the 1 hour at 61.8. So
Okay, so we'll entertain all of that. That's your 5, not quite to the zone. Let's go to the 15. See it there.
yeah, that 1 hour sub fib
Okay,
at
1 hour.
61.8. So we get a
Okay.
pullback down. I don't know. I like to see it pull back though.
Yeah, and then the back to that 1 hour. You said 80-20 on the to the upside or to the downside?
To the downside.
Where you running your fib from?
I want it from the top.
Here, off this high?
Let me come back to you. On the 1 hour from the B boundary.
Oh. Oh, man, that. I wonder if you're running it. I know you trade this smaller ones. I don't have that on my chart for some reason. On the one. If you can't
Things
post
going to
if
the
you
up.
can't post, if you can't post a screenshot in the community for me, what you
Yeah,
have.
you had it right. Where
Oh, I did.
61.8. Mm-hmm.
Oh, off the pullback. Okay.
Yeah.
Okay. Yeah. Okay. So we'll see it. We'll see which way it wants to go in favor into the
Yeah.
upside, but you could see another correction, down before. So
Mm-hmm.
we'll see. Yeah. Okay. I see what you're saying now. Got it. 80-20 was on those other time frames. Appreciate it. All right. So that's where we are. So we've got a pullback on that sub to 61.8, so we could see a correction before continuation. So we'll see. We'll see. So that's go. We've got silver. Okay, we've got a pullback, right? Almost 50%. We're stalling, right? In that 80-20 zone. But we've already got a deep correction, so I'm looking for that to eventually continue to break through, head to the extension on silver. That gas, right? We just moved to the upside. Look at that. Boom, TP2. Let me pull this up, fib off. Okay. TP2 now. Okay. We are fundamentally bullish, right? But we know we got a good, nice size correction on that gas, right? So we flipped the fib on a 1 and found the short term 80-20. But I do want to see that gas continue to move long. But for that counter trend trade off the reversal, we're back. We're back at action to the upside. So that's 2 TPs. We're looking for this to ultimately continue long. Here's our long move here, right? On the daily. Sometimes I can't stand working within the same chart, but with a different time frames. But there. So we can see that from our daily look, right? We double bottomed at that 297 level. Okay. We double bottom. So we look for the bullish momentum to continue. So it showed up as an 80-20 on a 1. It's putting us back in a bullish direction after the correction that we had, right? We held at this level. Okay. Y'all see that? Right, at that double bottom. Okay. And now we're moving back bullish. So forecast is for us to continue long on that, guys, right? Major fundamental play that we're following. So that's that there. Taking a look at our indices. All right. Foolishness, right? Dollars moving sideways, S&P is moving sideways. Eventually, we're gonna get something. Eventually, we're gonna get something. Okay. You've got that 6,600 level. You got some market participants. You listen to, Bloomberg, CNBC, things like that. You've got some major investors calling, hey, we'll see a correction, but they like 6,500 level, 6,600 level for the S&P eventually this year. After everything shakes out, we'll see. We'll see. US 30, same thing. Nothing doing. Nothing doing. You got to find something else to do right now because these indices aren't it. Nothing doing. Too much back and forth. The Nikkei, though, is starting to move back in that upward direction, which is good. So that's good news. The UK 100 closing in, and I got with that. That's close right there. Eventually, we'll see it take out that extension, but we got that pullback. If you're out of that trade, if you take it, I don't blame you. That got close, right? That got close. But you can see how, oftentimes we tell you put your TP levels just a little bit up before your extensions, right? Because you can get these reactions. Then you either make the move to get out or you hold until it recovers. But that's been a pretty good move for us. This one here, this German 30, ever since we broke and retested this consolidation, it's just been moving. The next test, we were saying, hey, is it going to hold at that 21,104 level? It did double bottom, and we're closing in. We're pretty much at the extension there, right? So if you're trading that GR30, I would probably look to close out on that move, right? Gotta love the Fibonacci sequence, right? In times of chaos, it could bring calm, right, to the situation. So that's where we are on the indices. That's all I have for this morning. We got through a lot, right? 7:30, right on the nose. Any questions before we log out? Nope.
No, sir.
No. All right. So good week coming off the weekly ritual. Hopefully some of you were able to take those positions if you're trading, if you're holding long term, ETF positions and things like that. Just continue to hold, stay in the market over the long term. It'll pay off, but we're not getting a whole lot right now. It's just bouncing back and forth as we can see by our indices, right? You can see that what's going on. I will look at the right before we log off. Take a look at the spider, just the overall, to see what we look like for the sectors. That's where we ended up yesterday, right? That's where we ended up yesterday. So not a whole lot, right? It's red, but you can see that not too much, not too much going on. So that's it. Ryan, anything before we close out, sir?
No, sir. Great session, bro.
All right, appreciate it. Hey, we'll see everybody tomorrow morning, 6:30 a.m. Eastern Standard Time for the pre-New York session. Don't just count those pips, but indeed count those blessings. Keep an eye on the community for reports, details, data, community sharing, right? With that being said, have a great day, everybody. Bye.